Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So guys, again, just brief look at the gold market. Since you can see, market stands rather tight, and it's really nothing special is going on here. It's not much to comment. Our position here is the same. Anything could happen after the washing out the 1180s area, but hardly will happen something. At least the washing will happen. That's really a very big temptation around the 1180s area, since that is the psychological level is 12 even. That's the lot of stop orders that have been placed there on the gold market, since this is the really significant low on the monthly chart. And if even the sentiment will suddenly shift to the bullish for some event, and if even market will jump out to the upside, and this will be either reversal or deep retracement, anyway, that probably will happen after that. So even before reversal, we need to get the washing range of the 1180s. That's the just the habits of the gold market. That's how the gold market usually behaves. And until this will happen, it's very difficult to take the long position beyond the factors that stand over it. So that's why our core idea is the same. Wait when the market will clear out 1180s, and after that just keep watching. If market will break it and hold below this area, that will be the road to the downside, and this will tell us this our monthly butterfly buying pattern starts to work. If market will grab the stops and return right back up, this could be a reason for the retracement, and this retracement probably will be significant. That's our view on the medium-term perspective. In the short-term perspective, guys, it's nothing really drastic has happened. The storages of this PDR fund is continuing to falling and decreasing, and every day this holding usually decrease approximately for 1-2 tons. That's really indicator of the lack of the physical demand on the gold market. And that's why, as we said, any short-term rally will be doomed with the lack of significant physical demand on the market, and you can see it day by day. So here was the starting bombing in Syria. Rally has been doomed because no purchases has followed. Just speculation games. Market continue to move lower. Yesterday again, some attempt to move higher. We said maybe market will create the shadow of the possible reversal pattern. Maybe market will form at least the double ripple. If even it will fail later, at least this will be the reversal pattern and some hint in the possible retracement. That was the attempt to move high on the turmoil in Hong Kong, and also rally has been doomed because no purchases has followed again. Now you can see the market is continuing to move lower. That makes me think that we will see today the breakout to the downside. I'm not the big gambler because the guessing of the and betting of the numbers on the non-farm payroll release is just mostly the gambling. But the situation is developed so that I feel that this could happen. Personally, I'm not trade the data releases. That's not my style. But I have no objection against that, because this is if you can do this and you have the skills to do this, why not? If it brings you a significant amount of money. So on the daily chart, the situation how it develops in general makes me think that we probably could get the downward breakout here. On the 4-hour time frame chart, we see some clues. First of all, take a look that although market stands above the weekly pivot support one, at the same time it can't pass through the weekly pivot point. That indicates the bearish sentiment on the market. That's the first sign. Second sign, recall our here was some sort of the diamond pattern or something of that sort that we have discussed, and I said that diamond is a very cunning pattern and they mostly fail rather than work. You can see here again, as diamond usually is a reversal pattern, and as it has failed, that could be the clear sign that market has the intention to continue move lower, mostly because of the failure of reversal pattern. It's the same as the double repo failure. Although the double repo is reversal pattern, if it will fail, then we get the clear signal, that is also the signal by the Jordan Applet directional pattern, that market will continue move in the same direction. That's approximately the same idea here. Any failure of the reversal pattern very often means that market will continue move in the same direction. So you can see here we get some downward wedge pattern or pennant or something of that sort, and downward action. You could easily imagine the possible candle here to the downside. That's very typical for normal market behavior, especially that's not especially when we have no support to the market from the real purchases or real demand on the investors on the gold right now. So let's see what will happen. Our suggestion in the short-term perspective for today's session is keeping short, but contract your stops. Maybe even place stops to the break even, because there could be really significant volatility, and it's better to manage your risk or reduce your position, decrease the value of your position.